within the balance sheet. The total deadweight tonnage was 500,000, little bit more than 500,000 tons, and the average size per ship was 25,300. At the bottom of the slide, I have put up for you the various valuations that we've had over the years for these same ships. And you can see quite clearly that values in shipping change quite dramatically depending on the health or the weakness in the freight market. This is a snapshot view of the Baltic Dry Index. It's more than 25 years long, and it shows you how the market has been moving. If you look at the market prior to the 2003 run that took place, the major movement that took place, you can see that the index used to hover between 500 points on the low side and 2,500 points on the high side. But since 2003, the market has only but rarely been below the 2,000 mark. Otherwise, it's always been above 2,000 mark. We are right now once again in the territory below 2,000 points on the Baltic Dry Index. If you look at the averages, it gives you a better picture. You can see the cycle with a little bit more clarity, and you can see that in 2002 we had a low point of the cycle. 2004 was a high point, followed by a low point in 5 and 6, and then again very large movements upward in 2007 and 8. Following that, we've had 3 years of steady decline, and I suspect that we will see a similar position for 2012 and likely similar situation in 2013. Whereafter, the market should once again start to move back up. This is a slide that gives you the demand side broken down into the major cargoes. And if you look at this, you can see clearly that iron ore represents roughly 1/3 of the market share. Coal and steel, if you put it together, again represents another 1/3 of the market share. And then the balance is between, another 1/3 is between grains and other cargoes. So if industrial production, which consists of iron ore, coal and steel, slow down, then you will have a significant slowdown in the dry bulk market. And if it is combined with the slowdown in grain movement, then you have what is known as a seasonal impact coming in. And to look at the seasonal impact, we've given you this slide to show you that in the months of July, August and September, traditionally, the Baltic Dry Index stays at a low level. And the reason for that is OECD countries, which are the major drivers of industrial production in the world, actually slow down during these months for their traditional holiday time. And the second reason why the seasonal impact is quite clear is because grain movements actually stop during these months. The southern hemisphere grain movement completes by the month of June, and the northern hemisphere grain movement only starts at the very end of September, early October. So the months of July, August and September, generally there is no grain movement, and at the same time industrial production also slows down. But with China coming in, this has changed. So if you look at the blue dotted line, that gives you the same slide, but between 1985 and the year 1999. And the pink line gives you the average between 2000 onwards. So if you see that line, you can see that only grain movement slowing down between the months of June, July, August and September has a sort of a seasonal impact. But the real industrial production impact comes during the Chinese New Year, and you can see that in January, February, there's a very sharp fall. So you should expect a similar type of movement every year, because China today is, I would say, one of the largest movers for industrial production numbers. Coming to the supply side. If you look at the supply side tables, you can see that in the first 3 quarters of this year, we've had a 10% net increase in supply on a DWT or a deadweight ton basis. This is despite the fact that in the first 3 quarters of this year, we've had an exceptionally large amount of scrapping taking place. But there is still more supply on the horizon. And if you look at the balance of ships that are still to be delivered during the last quarter of this year, you can see there's another 11% still to come. The worst news is that in 2012, the supply side has now grown to 21% on order, and 2013 is now already becoming quite full with 9%. So supply is continuing to be generated through the shipyards and through the orders that ship owners are placing with them. Now, there are 2 factors that can affect supply. One is, of course, scrapping, which I did mention, and the other one is slippage in the or delay in the delivery of ships from the new building market. So if we were to look at scrapping and look at the year 1986, you can see that the highest ever scrap rate prior to 2011 was in 1986 with 14.1 million deadweight tons of ships that were scrapped. Now, during that year, the Baltic Dry Index was around the 500-point mark. And if, God forbid, the freight markets were to ever go back again to those levels, then you might see what you saw in 1986, where ships as young as an average age of 15 years were scrapped. In fact, if you look at that slide, you can see that some ships as young as between 10 and 14 years of age were also scrapped that year. If you look at the 2009 number, you could see that 12 million tons of ships were scrapped that year. But let's look at what's happened in the most immediate past, and you can see that in 2011, in the first 3 quarters of this year, we've had the highest number of ships being scrapped. Now, this is on a number of ships scrapped per quarter. If you see the same slide in terms of deadweight tons, again you can see that 2011 has turned out to be a record year. If you add the 3 extreme bars on the right hand side of the slide, you will see that total scrapping in the first 3 quarters of this year has already averaged more than 20.5 million deadweight tons. People are forecasting that this year will be a scrap year of somewhere between 25 and 27 million tons. And that is very, very good news, because that is helping to address the supply side tables. The red line represents the percentage by deadweight ton terms of the small handy size sector where we are located on their scrapping ability. So you can see that in our sector, more ships are being scrapped, even though we are in the smaller size. Even by deadweight ton terms, we have one of the largest numbers of ships that are being scrapped. Coming to slippage. If you look at slippage, in 2008, slippage was 23%. In 2009, this climbed to 41%. In 2010, it was at 38%. And now, for 2011, at least in the first 3 quarters of this year, this has further fallen to 31%. That means more ships are being delivered this year than have been delivered in the last 3 years as a percentage of the order book. Now, this is bad news. You really want slippage to increase, but it's actually been falling. This is just a summary to show you how supply side has changed. If you look at the supply at the turn of the century, that is on 1st January 2001, we were at the 295 million deadweight ton mark. And if you look at us in the end of the 3rd quarter, we're already more than double that number at 608 million deadweight tons. So supply in the last 10